Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be talking Bitcoin. We're going to be talking on-chain data. We're going to be answering a few questions that I've seen and kind of giving my thoughts and opinions on what I think all this data is telling us. As I get into the video, if you find it useful and informative, smash that like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Obviously, if you haven't joined us in Discord, check it out. We're linked in the description below. It's the first place we go to notify you of everything going on in the crypto space. So why not keep a finger on the pulse of crypto by joining us down in Discord? And one of these days, I might actually be able to get a sentence out without stuttering a little bit. Right, let's get into this. Right, what's come up? What is the purpose of this video? Well, this particular tweet from Glassnode entered into our Discord server, and someone is asking my thoughts on it. So why not do that in a video, talk about what this tweet is and what that means, because I talk a lot about wallet counts and whale numbers and stuff like that in these videos, as you know, and well, this particular tweet is all about that. The growth in the number of whales on the Bitcoin network has been diminishing cycle upon cycle, and the important things you have to take away from here are the words that are used. Unfortunately, sometimes people will skip over a few things here. So what we're talking about is the growth, okay, is diminishing. It doesn't say that they are just completely decreasing overall and there's diminishing numbers of whales total. It just means that the growth is diminishing over the cycle lengths, okay? So let's talk about this. So you obviously have the graph here. I can bring this up on here so you can kind of see what they're talking about. The number of whales on the orange line, which was Epoch 1, which was 50 Bitcoin, 25 Bitcoin, 12.5 Bitcoin, 6.25 Bitcoin. So we're looking at, so we're looking at diminishing amounts of Bitcoin across, right? So number of whales to start with, Epoch 1, 436. That is then followed up by 139, followed by 98, and then an incomplete one at the moment at 91. 91 was the previous one, and then where we are right now at 98%. So chances are we have to decrease down. So if we think about this, what they're telling us within this data is that over the previous halving events, essentially, we've seen the number of whales increasing halving on halving, okay? So if we were to think of the very first halving, and then the halving that happened afterwards, we saw the difference between 436 and 139. So whales were growing, but they were diminishing the rate that they are growing, okay? And then, of course, we can see that Epoch 3 is the blue line. That was 91%. And at the moment, we're still 344 days away from the halving event, and it's sat at 98%, which means that we are more than likely going to drop down even lower. If we read this data, if whale growth is diminishing over epochs or over halving events, then our current epoch, number 4 here, is greater than the previous one at number 3 at 91. So it could, of course, deviate down, or could deviate away, and maybe we're now going to see growth or equilibrium between these halving events. Or alternatively, there's going to be more selling pressure from the whales that are going to result in the growth of whales diminishing over a longer period of time. That, or they're just being static, and as time progresses, the number of whales historically versus the same time period will have shifted and changed, which will change the percentile here. So there's a lot to kind of take in that, but for the most part, what I'm going to do is I'm going to jump into the on-chain data, and we're going to review what the numbers actually are, okay? Because when we talk about percentages, that's one thing, but actually it's more important to actually see tangible numbers behind those as well. So let's bring up our data, okay? So we're not going to really look at this. I mean, inflows and outflows have seen a significant change. So while we're here, we might as well just talk about this briefly. We can see that there is a significant outflow that occurred in the last 24 hours. Okay, so that's great. It's looking really interesting here. We can see that we had 49,000 Bitcoin leave the exchanges yesterday and only 23,000 going on to the exchanges. So there's been a significant outflow of Bitcoin yesterday. That's bullish. So we'll see how that kind of plays its role. But let's go ahead and move on into the wallet count data, right? So specifically, we're talking about whales, and we can see that they have been accumulating recently here as we see the Kraken, which is over 10,000 Bitcoin going down. Okay, so when we bring up our tweet again, this one here, okay, what we have to understand is what they're talking about here specifically are people and institutions and players that have over 1,000 Bitcoin. 1,000 Bitcoin is a whale, okay? Or more than 1,000 Bitcoin. Can't be lower, has to be more, right? And what we don't want to do is confuse ourselves by taking a look at this data and thinking that the Kraken are decreasing here. Yes, they are still whales technically, but they're much larger whales. Humpbacks, I think, what Glassnode would actually call these 10,000 Bitcoin wallet holders. Okay, they would call them humpback whales versus whales, which are essentially just 1,000 Bitcoin or more. Okay, so taking a look at our data, we can see that we have over the last 90-day period, a bit of a push to the upside here. Oh, let me bring that back. A bit of a push to the upside here on the number of whales. Most recently, in the last few days, we've gone from 2,009 wallets up to 2,033 wallets. Okay, and that's a really important number. Okay, but this is only showing us 90 days. And what I want to do really is, in order to kind of reference what's going on here across those time periods, is we're going to have to zoom much further out than 90 days. So we'll come back into the data here. What I've gone and done is I've gone and grabbed the 365-day view and then removed my time horizon filter to give us all time. Okay, and this is what all time looks like for Bitcoin whales. Okay, so what we want to do is we want to kind of talk about, okay, well, we saw very early on, let me actually hide my camera here so it's out of the way. There we go. We can see that pretty much since Bitcoin started, there's been an increase in the number of people that had 1,000 Bitcoin. This was pretty obvious because price was so affordable back then. It was very easy to accumulate a very significant amount of BTC in the very early stages. So the number of whale wallets during this time really did explode. It was massive, right? So we can see that there were over 1,426 people by the time you really get into 2013, right? We can see that obviously they had that little bull market over here as well, really insignificant numbers. You can't really see it really well. And then, of course, we have the decline as they go into a first bear market for Bitcoin, okay? So we then see growth afterwards as we kind of come out of that range. Price action starts to increase. We're talking a few $100s here per Bitcoin. And again, you can see the number of wallets here that have over 1,000 Bitcoin increasing. And it's pretty easy to kind of look at this and say, okay, well, that's cool. At those prices, yeah, it's pretty easy to kind of get 1,000 Bitcoin in your wallet. It would have cost less than $1 million. So, some larger players and some high net worth individuals could have got 1,000 Bitcoin reasonably easily. Okay, so as we kind of enter into 2017, actually go into late 2016, these number of wallets go down as price fluctuates a little bit and then starts to pick up again as we go into 2017. Now, we remember 2017 as the year where we saw the first real significant all-time high at just short of $20,000, right? And during this time, we can see that the whale counts were decreasing. This is for good reason, okay? So if we think logically about how the price action, let me actually press the right button, that would be helpful, wouldn't it? So as we kind of think about how price action reacts to or how people react to price action, I should say, if I can get my words out. It's understandable that if you've got 1,000 Bitcoin, right, and you are buying it at $100, and all of a sudden prices are bordering on to the kind of $700 level, you kind of 7x your money here, and it's pretty significant. So there's a lot of selling pressure, but that selling pressure really starts to amount as soon as we kind of go up above $1,000, and we can start to see as we push up higher here, the number of whale wallets decreases. And this is understandable because they are grabbing the liquidity. They're selling into that price rising. Okay, you don't tend to have this the other way around where retail investors, for example, they tend to buy the highs and the FOMO in and all that kind of stuff. These are very early adopters at this point, and they're able to kind of grab a lot of that extra liquidity right in the 2017 highs, and we're selling into that move to the upside. They were also selling as the price came down a little ways, more towards $11,000, and they didn't really participate too much after that until they actually had some Bitcoin to buy at a cheaper rate. So they started buying back up again at around $7,500. And then they start to really aggressively start buying when it goes down to $3,500. Okay, so they're really buying into the price going down and they're really selling into the price going up. And what we can see here are the number of wallets that they exploded massively to start with, right? So since kind of like the 2013 highs over here, for example, that's kind of your first point. Then you've got the measurement over here of how many more wallets. So we are talking 1,500 jumping up towards 1,800 and so forth, right? So we can see that during that entire time period there was a significant surge. Now, when it comes to the Glassnode report here, this isn't looking at it across bull markets, and it isn't looking at it across bear markets. What this is doing is just taking a look at the halving events, and it's basically counting up the whale wallets by the halving events, which I think is not necessarily a very constructive way of doing it, because it can trick people into thinking that there's something else going on there. Now, if we take a look at our graph here, we know that the halving events actually happen about midway through the actual bullish market, which means they counted that there as the growth for 436%, right? And then there was another one somewhere around here, actually, I think. If I can find it. It was about March 2017, I want to say, from memory, something like that. So around here. And in fact, I can bring this up on my other chart so that we can have good clarity on what is going on. So let's go ahead and bring that up so we can see, because I have put all the halving events in this one so that we can see where they were. So over here, we had this green line. This is basically November 2012. Okay, that was the first halving event that we had there that I can see. Then the second one over here happens in July 2016. So if I bring back my data, we essentially are talking about November 2012. So down here, right, talking about this kind of time frame here, all the way through that growth period into 2016, which was July. And if we were to look at it like that, you'd have all of that time horizon there. All of that data is basically growth of whales. Okay, and then of course you have this one here, which then shows diminishing gains or diminishing growth on those wallet counts, because you have this huge run at the beginning. So if I were to kind of reflect on that, it would appear to me that this data here isn't really going to give us a huge accurate kind of representation over that first one there. That's going to have to be an outlier. We're going to have to kind of ignore that one. And instead, we're going to have to really focus in on these ones. Now, these are all hovering around very similar levels. Okay, so I'm not terribly too concerned about those. So when we take a look at this one, once again, we have the July 16th to July 2016. We have May 2020, and the next one is April 2024. Okay, so coming back into our data here, knowing that we had a move down in price here in March 2020, this is where the next iteration was. So from July 2016 up to here, all of that is then going to be your 98%, I think it was, or 91%, whatever that was. So you can see the growth there, and it is smaller than the growth previously, but it's still growth nonetheless, and it's important that we reflect on that. Now, when we take a look at this zoomed out view for Bitcoin on this graph, where we see all the price action, we see all those whale counts, we can see that there obviously was a huge selling pressure right up here as price pushed up into the highs of 2021. Okay, and we can see that there's still selling pressure occurring here, even though there's price pushing up. And when price pushes up, whales tend to go down. They don't tend to go up, right? There tends to be less whales as price goes up and more whales as price goes down. Okay, so it's really interesting. Now, of course, this is just whales with 1,000 Bitcoin or more. We can also cut this into Krakens, which are 10,000 Bitcoin or more. And for the most part, these guys have been quite volatile. You can see that they kind of bounce around a little bit here, really brought the price down in 2018's bear market. And they have been selling into the pump up here as well. They've accumulated during this bear market like they did in the previous bear market. And we're kind of waiting to see what these guys do next. Are they going to be selling into the liquidity and all that kind of stuff? We then have Sharks. Sharks are pretty static, 100 Bitcoin or more in their wallets. And although the players and the different participants here, the wallet counts aren't fluctuating massively, which basically means this is really quite a consistent bunch of individuals that are just buying and selling and kind of trading Bitcoin. And I've often likened this particular size wallet count as a professional level trader, which means they're in and they're out of Bitcoin quite frequently. And I think that attributes to the idea that we're just very, very static in terms of the wallet counting that is going on across a much larger time frame. Again, you can see the exponential growth at the start, and then it just flatlines. This is eventually where I think whales will end up. They'll end up with this kind of very flat-lined approach where we won't see that volatility coming in and out of the market in the same way. But I think we are quite a bit of time away from that. Now, retail investors are on the up and up and up and up. Okay, we hit over 1 million wallets recently. We can see that here, 1 million wallets with over 1 Bitcoin in them. Fantastic milestone. Slower on the adoption curve to start with, but we can see here that they have continued growing in size over the period, right? It's continued growth. But there are pockets, obviously, where you see sustained selling pressure coming in, and we're waiting to see that selling pressure for this bear market. There has been no selling pressure from retail investors in this bear market yet. Okay, nothing of significance, nothing like we saw over here in 2016 when the Fed pivot, nothing like we see over here in the 2018 bear market, and nothing like we saw over here in 2019 during the Fed pivot. Okay, what we're waiting for is we're waiting for that selling pressure to occur. Okay, that will probably happen when the Fed pivot, whenever that may be. Okay, so we see these interesting things inside the data. We can see that, over the time, we have quite significant changes in terms of the volatility within the wallet count data. And also an interesting kind of view, I guess, from Glassnode as well, in terms of looking at it from a percentage point of view. Although it doesn't look at it from bear market and bull market points of view, it only looks at it from a halving point of view. It is an interesting take on the data nonetheless. I personally wouldn't be relying on it too much, because I do think that it's quite misleading in the way that it's approaching the growth of these whale wallets. Interestingly enough, though, I would agree with the idea that we probably need to see a little bit more down in terms of our whale counts, so that it does bring it more in line with Epoch 3 or the previous kind of halving event, if not slightly lower. So we see that diminishing amounts of growth, because there is going to be diminishing growth when it comes to the Bitcoin whales. This is an inevitability with anything that grows over a long period of time. Eventually you reach equilibrium with it. Now, from our kind of graphs here, if I get rid of that, we can, of course, see all the different things that have occurred during this bear market. So far, we obviously have the next halving in April 2024 approximately, so we've got some time there. And I will say that the halving event normally does happen after your bullish market has started, and it doesn't look like we've started this bullish market yet. So we could start to shift and change Bitcoin's history around again, like we have done several times already. So for example, we've gone down lower than the previous all-time high for the first time in Bitcoin's history in 2022. We've also gone down lower than the 1.382 on the Fibonacci extensions. Historically, we stayed above the 1.236, and that's quite an important note that you have to understand, because that affects your analysis. You can't repeat history if you've got an underlying variable that is different, and that is a very important variable. And we have that one. And then, of course, we've kind of got some interesting things in terms of how long this bear market has gone on so far, which is quite interesting as well. It's also would be the lowest percentage drop from a bear market point of view as well, if it has already bottomed out, which I don't think it has. So it's going to be interesting to see whether or not we're going to rewrite history here with the Bitcoin halvings. I've often said on this channel that Bitcoin halving has less and less impact as time progresses. I think it's very less impactful now. It doesn't matter so much about new Bitcoin being produced. It only really tends to matter about the circulating supply, because there is so much of it out there now. So the new supply coming in, being halved, has very little impact on price, but it will trick retail investors to create FOMO activity and all that kind of stuff, because people will believe that it is the catalyst for a new cycle. There is not enough data here to suggest that that is what goes on. This is really only our third proper bearish market, and of course this would be our fourth halving event that's kind of in and around those. So I don't think we really see the data that supports the idea that history repeats itself at the moment. A lot of the indicators are only looking at historical data and then reporting on that, and a lot of people are going to be tripped up, in my opinion, regarding that one. So it's going to be interesting to kind of see how that plays out. But I'm going to leave the video right there. If you found it useful and informative, smash the like button. I do appreciate that. If you are new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, guys, I will catch you all, or by doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And of course, I will catch you all in the next one. We are not financial advisors, and none of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.